Today, digital currencies tick higher to kick off the week. Michael Saylor's strategy announces another round of Bitcoin buying, and we dig deeper into the conversation around debanking and how the industry hopes to change minds on Capitol Hill. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto markets are little changed to kick off the week as investors weigh the potential consequences of new tariff threats from President Trump on steel and aluminum imports. As of noon Eastern, Bitcoin rose 0.9%, trading at the $97,000 level. Ether traded at $26.65, and Solana climbed 0.5% to $203. Okay, let's talk about the top stories. Bitcoin Proxy Strategy just announced the first Bitcoin acquisition under its new name. The company, which went by MicroStrategy until last week, bought about $742 million of the digital currency last week. Now, it disclosed a total holding of 478,740 Bitcoin, or about $46 billion at today's prices. The rebrand reflects the company's aggressive Bitcoin buying strategy with an orange brand color and a logo that includes the Bitcoin symbol. As of noon, shares of the stock rose 2.4%. Michael Saylor also seemed to give a boost to shares of GameStop after Strategy's executive chairman appeared in a photo with GameStop CEO Ryan Cohen over the weekend. GameStop shares jumped 6.6%. Next, meme coin hype continues. This time as Kraken lists a meme token pumped by Barstool Sports founder Dave Portnoy. Now, a day ahead of the Super Bowl, Portnoy began sharing many tweets promoting a meme token after publicly dabbling in the trading of a couple other coins earlier in the weekend. Now, the main token, Jailstool, was listed on Kraken in the midst of Portnoy's tweets and grew to a market cap of around $200 million before shrinking to half that value by the end of the day, according to CoinGecko. Now, the value continues to fall, and the token's value is at $48 million as of noon today. This comes amid growing meme coin hype, especially after President Donald Trump and First Lady Melania Trump launched their own respective meme tokens just days ahead of their return to the White House. All right, for our main story, let's dive deeper into the conversation in Washington around debanking. Trump spurred a wave of conversation early in his latest term when he claimed in front of the World Economic Forum that banks locked many people, particularly conservatives, out of the financial system. But there was another group that has long argued that it's been shut out of the U.S. financial system: crypto businesses. And quickly, that conversation found its way to Capitol Hill with hearings in both the House and Senate tackling the issue.
The past 4 years, and particularly the debanking that has gone on, has been just in a whole host of ways negative for the crypto industry, whether that's more of the business moving offshore, whether that's loss of trust in the American financial system, whether it's just the heartbreak of many entrepreneurs who were not able to build their businesses.
Now, the crux of the industry's complaints center around the idea of choke point 2.0, the claim that the Biden White House used its administration and regulators to target crypto businesses and push them out of the financial system. The 2.0 comes from a similar tactic that the Obama administration allegedly used to go after banks that backed gun manufacturers, payday lenders, and more. Now, the industry believes that with Trump in office, the barriers that it sees to using U.S. banks may start to fall. The FDIC released hundreds of documents detailing its communications with banks and businesses that deal in crypto, in the hopes of being more transparent in its dealings with digital assets.
Coinbase is for its part, attempted to shine a big bright light on this, particularly as it has taken place at the FDIC and its oversight of banks. We've exposed, for example, that pause letters were sent by the FDIC to bank after bank after bank all across this country that wanted to do nothing more than offer crypto-related services as part of their portfolio of products and services.
And SEC Commissioner Hester Peirce promised a new open-door policy for people to discuss crypto as the agency begins to unravel its harsh stance on digital assets, including rolling back a rule that paves the way for big Wall Street banks to hold Bitcoin on their balance sheet. And as for debanking, the industry wants a rollback of regulatory barriers and new rules that foster crypto innovation. President Trump's executive order on crypto said as much, that the U.S. will protect and promote fair and open access to banking services for all law-abiding individual citizens and private sector entities alike. There's hope that Congress is listening as well.
No one wants to see anyone denied basic banking services on the basis of their political views, or whether they happen to work in an industry that might be out of favor with the current administration. We've seen Democrats like Maxine Waters also voice support to these efforts to shine a bright light on this. We've seen Republicans like Tim Scott also take up that charge alongside of French Hill. There are, I think, concerns across the political aisle and across the Congress that banking services have in the past been weaponized in order to run roughshod over those who may be out of favor.
The meta level point must remain that if this can happen to some of us, it can happen to any of us. And we certainly should not have a banking system that on a whim can pick a set of people who are disfavored and cut them off from the banking system. Both sides of the aisle in the hearing today recognized that that is not something that should be possible. And both sides, I would say, proposed policies and particular agendas that would help to strengthen the banking protections available within the United States.
But what the industry and banks really need are what they've been asking Congress to create for some time now: a regulatory framework for digital assets, which will make banks and businesses more comfortable working with crypto.
I think right now we're in a discovery phase. And then I think you're also going to see, similar to what has happened at the FDIC, likely to see other kinds of transparency happen as more of the new administration's appointees take over at the various government agencies.
I think what the banks and financial institutions are all going to be looking for is regulatory clarity in the form of rulemaking by the SEC, legislation passed by Congress, and the commitment of the administration to finally addressing the serious concerns around debanking that Coinbase and others have raised now for some time.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.